Hello guys, welcome back to the channel, welcome back to another video. So today we are going to be talking about our strategy. I'm going to do a review of the previous pairs that have been doing well, and then maybe I can tell you also what might happen tomorrow. I think you guys can go through the last videos and see the pairs that we have been talking about, how they have been doing. I told you this is a solid strategy. You can use it and it can help you extract money out of the fucking market. So welcome back to the channel, guys who have not yet subscribed to the channel. We are on the road to 1,000 subscribers. Remember, when we reach 1,000 subscribers, I'll be putting you guys in a Telegram channel and I'm going to teach you how to trade for free the moment we clock 1,000 subscribers. So guys, kindly make sure you do subscribe to the channel, be part of the first 1,000 people. Beyond that, I'm not going to be including you. So we shall go straight to the charts without wasting any time. Let's start with GBP/JPY. Yes, GBP/JPY, this is the weekly time frame. So this trade was got on the daily time frame, and I'll tell you how we got it before I can proceed to another pair. So GBP/JPY, it was very simple and direct. We had price making higher highs, higher lows, higher high. Then price formed a base here because price rejected this area. When it came back, made a huge rejection from the upside and gave us an engulfing candle, making a lower low, breaking this previous high to make a lower low. So after, price was retracing. So the moment we saw price retracing, it was very simple, clear cut. This is where we're going to react from. However, the supply zone was on the 4-hour, so we marked the zone very well. This was the supply zone, and I told you there was some reason as why we sold from here. One, because price was making high highs, higher lows, high high, and lower low. This one is a QM pattern. This is a QM sell. It simply shows you that price has changed direction and it is now heading to the downside. So if it is going to sell, where is it likely to sell from? The supply zone. So you mark that supply zone very well and look at how price dropped to the downside, hitting and surpassing our level target. So our target was 200 pips around here, but now it has gone up to 230, and I think it is retracing, or it might even proceed to the downside. We shall see how today's daily candle is going to end. So what is the name of the strategy? We combine support and resistance, top-down analysis, then supply and demand. Support and resistance, we use them to get the direction of the market from the high time frames, that is the daily and the weekly, sometimes even on the 4-hour, but rarely. The weekly, daily, 4-hour direction of the market using support and resistance. Then we come to the 4-hour, 3-hour, 2-hour, 1-hour to look for our entries using supply and demand. So all that process incorporated together gives us a top-down analysis. And now that gave us that, so we sloped down to, that was GBP/JPY. Then we go to AUD/JPY. Now what happened to AUD/JPY is almost similar or identical to what happened to GBP/JPY. So price was going up, and then it formed a higher high there. After forming a higher high, price came down to react from this demand zone and then it started going up. However, on the 4-hour, it was making our pattern that we talked about on AUD, on GBP/JPY. You saw a higher high, a higher low, and then a higher high, then a lower low, a lower low. It even broke these previous demand zones to make a lower low. So immediately started going up. You knew that it was going to react from this zone here. So you marked your supply zone very well. And then price came, tapped into the zone, and look at the drop, guys. It is still dropping. So the target is here. That is 127 pips. So far it is at 92 pips, but it is still dropping. So let's keep on waiting on price action to see where it is going to reach. So the last pair I wanted to go about is US oil. So US oil, this is the daily time frame. And what do you see on the daily time frame on US oil? We see that it is trying to breach this zone. However, we are not going to be interested in anything unless these previous lows that were attained are taken out. before it is taken out, we are still ranging in this zone. And you remember last time I told you, when we reached here, we bought we bought massively up to here, then we reached here and dropped. So when we come back to this level, we are likely to buy. What are we waiting for? Just confirmation, and that confirmation is most likely an indecision candle, which was this one, and then price bought, retraced up to here, gave us another indecision candle, and then bought, retraced, gave us another indecision candle and bought. After reaching here, price gave us an indecision candle with a huge wick to the upside, then it started selling. So it has sold up to here, and I told you, if the moment you see that indecision candle, it means that the buyers can no longer go beyond this zone that you see. That's why you see the sellers came in and pushed price to close below here. So the sellers became strong, so we are likely to sell up the bottom. We have sold 300 pips just like we bought 300 pips. So now we are waiting for price to show us a sign here. It is either an indecision candle, and we know we shall be going back. If it breaks, we know we are coming down to the bottom here. So we're just waiting on US oil to see which direction are we going to. So now I'll take you to our strategy and then give you a brief introduction on what we should be doing. I think I can use USDJPY. Yes, USDJPY. Let me use USDJPY. So USDJPY reached this previous zone. This is a zone of resistance. Price tapped this zone and bought massively. So if price comes back again this zone and gives us this rejection you see here, we are likely to buy massively. However, I expected price action to reach up here, but it did not reach up there. I don't know why, but for some reason we did not reach there. We reacted from this previous level here and dropped. So I expect in the near future price will still come back to that area. So now if we react here and we start going up, where are we buying from? So you can enter after the closure of this candle, because you see this huge weak rejection, it shows that the buyers are so strong. You can enter from here and target the upside. However, if you miss the entry, it is very simple. This is now where supply and demand comes in. You're going, I'll mark it very well. So you're going to, after this candle has closed, you're going to drop down to the lower time frames to look for supply and demand areas. So this one, you look for, let's use the 2 hour. So you see any supply and demand zone, mark it. There's one here, it was not used. There is another one here, this one was used very well. And then I saw another one, I think on the 1 hour. Yes, on the 1 hour. Yes, it is this one here. Like that. So this is what you do, because now you have determined that the daily has hit the daily support, so it is likely buying. You're just looking for only demand zones to buy to the upside. So you had one here, price did not use it, so this one you ignore it. Then you had one here, price used that one, so you enter there your buy positions and target the upside, because you know that price is going to the upside, so you target the upside. And then we have another one here. This one was from the 4 hour, the 1 hour. The other one was from the 2 hour. You target to the upside. So your target should be mainly based on the daily time frame, because it is the daily that is trending to the upside. Things are small. Let me just make them big first. Like this, like that, like that. So when I come to the daily, they should be big. Yeah, they are big. So you see, one entry was here, that gave us around 250 pips. Another entry was here, that gave us around 220 pips. So together you'd having around 500. You'd be having around 500 pips just in one move. But how did you know the trend of the market on the daily? Because the daily hit the daily support, meaning we are going at resistance. So what you do, you just look for buying options with demand zones as you go to the upside. Okay, so price reached there and started retracing for no reason. I don't know why price was retracing there. This is why I need the 6 hour time frame. Price reached there and started retracing for no reason, and it has removed this previous daily demand zone. So meaning we are now we're starting to sell, or we're selling to the downside here. How do you get an advantage of that? Go to the lower time frames and look for supply zone. So we can see we have a supply zone here, very clean supply zone, drop, best drop, break in this previous structure. So we wait for price to react from this side and then we drop here. So 3 hour, how does it look? We have it, you can refine it to there on the 3 hour. 2 hour, it is okay. So I think this is the 3 hour supply zone. Shall refine it to that. So what are we waiting for? Price to come and tap into this zone, and then we drop price to to the downside. Simple, clear and straight. We wait for price to come, tap this zone, and then we come down here. Clean supply zone. What is the risk to reward? So you'll be risking around 45 pips to make 160. That is 1:3.5. So it is a good risk to reward. So let's wait for price action to come there. There was one here, but it was not used. So let's wait for price action to come there and you see what we can get out of it. So guys, that is how you use top-down analysis with support and resistance and demand and supply to get those trades. I hope you have learned something from the channel. If you have not learned anything, just go through the video slowly by slowly. You should be getting something out of it. So I think that is all for today. Kindly subscribe to the channel. Don't forget to subscribe, guys. I'm going to put you in a Telegram channel and teach you how to trade. The first 1,000 people to subscribe. If you have also learned something from the video, don't forget to like it. Okay guys, that is all. Let's meet tomorrow.